Welcome back to our channel, where we bring you the latest updates on finance, economy, and more. Today, we're diving into a hot topic, the Reserve Bank of India's monetary policy meeting and what it means for interest rates. So, grab your notepads and let's get started. Hey there, financial enthusiasts. The Reserve Bank of India's Monetary Policy Committee is at a crossroads, and we're here to break down the factors that could influence their decision-making. India has been facing a surge in the prices of essential commodities like cereals, vegetables, and pulses. Blame it on erratic monsoons and flooding. This inflationary trend is putting the committee in a tight spot. Why? Because it's limiting the RBI's ability to lower interest rates. But that's not all, folks. Hold on to your hats, because the global stage is shaking things up too. The U.S. Federal Reserve is back in action, raising interest rates for the 11th time since their inflation fight began. What does this mean? Well, it could have a domino effect on global monetary policies, including India's. We're not in this alone. Experts have a lot to say about the situation. Adhil Shetty, the CEO of bankbazaar.com, points out the importance of keeping headline inflation within the RBI's tolerance band. With interest rates already on the rise, a pause is like a breath of fresh air. And what about those home loans? Another rate hike could extend repayment timelines. But fear not. Borrowers can adopt smart strategies to manage their debt burden. Meanwhile, fixed deposits are still shining bright for investors. Locking in at higher rates might just be the smart move. Numbers never lie. Deepak Agrawal, CIO-Fixed Income at Kotak Mahindra Asset Management Company, provides some insight. He expects a little inflation bump due to skyrocketing vegetable prices, but believes core inflation will hold steady. This could be a comfort for the RBI, possibly guiding them towards maintaining the status quo. Let's put on our prediction hats. Palka Arora Chopra, director at Master Capital Services, foresees the RBI holding the line for the third time in a row. With inflation dipping and no fundamental reason for a repo rate hike, the stage is set for a cautious yet forward-looking stance. Mother Nature also has a role in this drama. Floods in the northwest and unpredictable rainfall have affected harvesting and supply chains. While this poses challenges, it might not be a showstopper for the next couple of quarters. And guess what? Liquidity has improved since the withdrawal of 2,000 rupees notes, which could impact the RBI's decision. So, what's the verdict? The RBI's decision hinges on inflation and the Fed's moves. If the stars align, with growth below 5.5% and the Fed's rates easing, RBI might just lower the repo rate. But until then, the RBI's stance will likely remain cautious. With global and domestic factors at play, this monetary policy meeting promises to keep us on our toes. And that's a wrap on today's deep dive into the RBI's monetary policy meeting. Make sure to hit that like button and subscribe for more financial insights. Remember, the world of finance is ever-changing, and we're here to keep you in the loop. Until next time, stay informed and stay curious.